Hi, thanks for tuning in. In this video, I'm going to discuss the swing trading rhythm and muscle memory that I use as a trader. I look at it like playing a hand of Texas Hold'em. You have to have a style and a rhythm and an approach, when to press the bet, when to fold. All that type of stuff has to kind of be built into your muscle memory. Otherwise, you're not really going to know what to do when the cards are revealed, right? So in this video, we're going to look at the first thing you have to do is to develop the plan, right? Then how do we enter? What do we do when we're in the market, right? How do we use the computer to do it for us, right? We have to use the computer to trade. And then how we look to either be invalidated or we hit some profit targets. And then ultimately, when does the trade end? When do we move on to the next trade, right? Stop out of the final position. And there's a few stops that you can use, and I recommend all traders have at least two stops, meaning one being some, hey, I've entered this position. The position is now down 10%. So some metric like that. In addition to, we hit the level that invalidated the pattern. I also like the idea of time stops. I've been in this trade for, 5 months and we've gone nowhere, right? I'm a swing trader trading the weekly, daily time frame. That being the case, I've been in trades where it's taken a few months before she finally got started. That can happen. So what you don't want is to be stuck in something for 6 months to a year and you've made no money, right? The opportunity cost is very high. So there's a time stop, so there's all these other ways to get you out of the position. And so what we're going to look at is the ETF SMH. This is the VanEck Semiconductor ETF. And what I'm going to show you is just simply how I've traded this, but just in general, how we're going to use the PPO to help with some of these pivots. Because during your correction, you're going to find that the oscillator is going to provide you a lot more value than these moving averages. Because during this correction, you can see price just oscillates through the moving averages as if there's no value there at all. And really, there isn't. It's more of we're trading price levels, and we're going to use the oscillator to help indicate when the momentum is shifting between bullish and bearish. So to give you the rhythm, right, let's just go through a trade. The first trade we're going to talk about here was in May. We looked at this. We were taking trades back here in TQQQ. We were adding to QQQ, TQQQ, and SMH and SOXIL. All of that over here. So the best way to evaluate this is price was approaching here, May 10th, May 11th. We were approaching this low, the 216 low. Every day that we got closer to that low, we were closer to risk. So any of these days, and I know this is going to be somewhat counterintuitive, any of these days, your risk was defined as 6%, 7% or less. And the goal is to find and identify, trades that are very close to risk. So right off the bat, develop the plan. As price was approaching this key weekly, monthly pivot, we had an invalidation level every single one of these days. So as we were buying knowing that we were close to risk. Knowing that if we had to exit the trade would exit quickly, meaning in a week or two or less. And the loss would be defined at 5 to 6% max. And some of the targets for this were quite obvious, right? Now that we're down here, this is a higher low. We've got a lower low in momentum, so that's a bearish divergence, but it's a higher low in price. So some things that you can do for targets now would be obviously the other side right? This all-time high. So that's exactly what we were looking for. So as price came into here, we were sellers. We were scaling out into this strength. And when did we cut? We cut the rest of the position here. We had one way of viewing this, and this is just how I was viewing it in real time, is we were looking for a lower high in PPO. Right? We saw it there. We saw it here. We sold both. We were exiting here the entire position on this cross lower. Some traders bought back on a recapture of all the moving averages. That wasn't me. Sets up the next ABC correction, something like this. We definitely were buying this. PPO reset to 0. Another higher low pivot, or at least a key pivot that you can see in price that led to a higher high in PPO. This is something we took. We were then having this profit target here at 263. Then scale out of everything here on this day, right? Why? Well, we lost the 10. We had the histogram showing us a curl over, the PPO crossing down. We were out of the trade. We then looked to buy back into the trade here. Why? Well, we had the POC, the point of control, this volume shelf showing us that that was value, SMA 100. Again, when this key pivot happens, what it does is it sets up the next area of risk. So coming into the 100 on this day, you knew you were only 3% from risk. So that was something I was worth, to me, worth taking. We took this trade. Again, where's the target for this trade when we came in and bought this day? The target was all-time high again, just another pivot back up. It's exactly what we got. We were sellers here. When did we exit the rest of this position? Way down here. Where should we have exited the rest of this position? This day right here, the 20th. And that was my fault. I was on vacation. But either way, the signals are there. You have to use these signals. Now I'm waiting for the next buy. It's possible, the histogram showing here that the bears are losing momentum, but it's also possible this is a 5-wave move lower and we're going to come down here and tag this level. And I'm not interested in this particular sector until we see some type of resolution. Right now, she's tagged the 200 a few times now and no longer is of interest. So just giving you SMH here as a guide going back 7 months now. We've had a few trades. I like to use the PPO to tell me when to get out of this trade. If you want to then incorporate a higher time frame, what you can do is look at the weekly charts and look at things where the trends are up on the weekly charts, which they are for this semiconductor ETF. She's been at all-time highs all year. So you look at a stock where the trends are up on the quarterly, monthly, and weekly, and then you take a daily chart and then you look for these types of pivots. If you were looking at something that was closer to a 52-week low, then this type of strategy wouldn't work, and that's not the rhythm that we're looking for. We're looking at things that are at 52-week highs, putting in ABC corrections, because why? Because they tend to then create another 52-week high, and this is just the pattern that keeps happening over and over and over on these charts that keep paying. Now here, this character has changed. The higher low, is certainly in jeopardy, if not lost. 249.35. 248 exactly. So they've already lost the higher low pattern that had been going on all year since March. So now you have to zoom out and see that this is likely a higher time frame correction, where those two are likely equal, and that's kind of the market symmetry. And what I've seen here is this pattern is setting lower lows and momentum, so the assumption should be that she will continue to set a lower low. If she sets a higher low, then we learn something new. But the assumption should be look for a break of this low and then for price to reverse. But yeah, this is kind of the rhythm that we're looking at. You scale into your position in this weakness. We scale out into this strength. We cut on PPO cross the remaining 50%. We come back in 100% here, cut out here, come back in here, cut out here, cut remainder here, looking to load back up here, sell up here. It's the same game over and over and over again. Right? We're just trying to, have a plan, right? Wait for a key pivot. We've got these pivots, right? Wait for a key pivot. Price to get close to that pivot. Understand that it may get invalidated. But what I'm going to do is take a trade as close to risk as we can, set the stop where it is, use the computer to set the stop so you don't have to do it. Makes this emotionless. Set your sell target if you need to do that. Wait for one of two things to happen. Either we're going to get invalidated and price is going to come down here and break this level, or we're going to come up here to the first profit target at 250. Once you hit the first profit target, you scale out. You scale out a third, you scale out a half, whatever you feel comfortable doing. As you get up here and you get the other sell signal, whether it be momentum, whether it be a moving average loss, whether it be, a weekly signal, whatever it is, just be consistent and use it over and over again and say, that's the signal I'm using to exit. And when I see that signal and when I exit, that means the trade is over for me. And that's the end of it. And really, this is the muscle memory you need to build. And if you go back and look at something that's been trading since I've been participating in this SMH market going back to February, if you look at it as, really 1, 2, 3 trades, that's almost 8 months, and I've only traded this thing 3 times. Right? So that's the time frame that I'm thinking about. Right? I'm looking at weekly pivots, daily charts to give these signals. I'm not looking at 10-minute hourly charts. The same concepts can be used on any time frames. But what I'm teaching you is really in this particular instance, how I use the weekly chart. I find a chart in a weekly uptrend, and then I use the daily charts, these indicators, and simply, this method of scaling in and pressing the bet when it's working. So coming down here, you certainly could have added again here. You could have added on this day here, the 11th, added on the 12th. The closer it gets to this level, the better. You could also say, well, hey, look, if we get above, this high here or the simple moving average 20, I'm going to press this bet and add. So there's a lot of ways you can do that. I'm telling you the way I play this market, right? To me, the closer to invalidation, the better. So I want the weakness. I want to add into the weakness. And I have to have a plan to do this. So I need to see this low and this high for me to have a plan to buy this dip here, looking to sell up here. Or to buy this dip here against this pivot low here. I can't guess the low. I need there to be a low to trade against. That's how I can define my risk and potential reward. And doing so is what enables me to be, be able to protect my capital. I mean, if you're not defining your risk before you get into a trade, more often than not, you're going to be in a lot of trouble. You're not going to be able to hold until you hit the destination. By the time you hit the destination, you're going to be euphoric because it's showing up on everyone else's scanners. All these different things, right? So the first step is to have the plan, then to scale into weakness over multiple days. This was 6 sessions that you could have scaled in. Then to scale out because the trade worked. Then to exit the entire position because we lost the moving averages. 2 sessions below with a PPO cross. Good enough for me, right? And as long as you're consistent and you can backtest your strategy and you can define your strategy into a set of rules so that you can consistently follow that strategy, the muscle memory shouldn't change. It's the same muscle memory, right? Place a bet. Do we get invalidated? No. Great. It's working. Let it work. Let it get to the destination. It hit the destination. Great. Sell some. Don't sell all of it. Keep going higher. This one did keep going higher. That's kind of how this game works. That's the end of this video. If you like the content, hit the like button, subscribe to the channel, come check us out on Twitter, and see you in the next video.